Hey, this is Justin with DayTradetheMarkets.com on Wednesday the 18th. Big FOMC meeting today. The market had a wild gyration moving basically right when the news came out, or a little bit earlier, moved 10 points down, 30 points up, essentially in a matter of 10 minutes. So this is a 1-minute chart. You can just kind of see that some selling came in ahead of time. Just had that kind of two-step that the FOMC kind of does. So we had rejection of this bar, rejection of this bar, the first of that selling bar, then the first buying bar, or first bar of any kind that had follow through. That's kind of the direction you're looking to go. Again, so the buying bar had rejection, the selling bar had rejection, this buying bar started to have some follow through, and you can see from here we moved 15, 20 points higher off of that. So just wanted to show that real briefly. More than that, though, I wanted to show something that some of our members have been doing of late that I think it's not necessarily how I trade, but if you're a more aggressive, momentum-based trader and you like to get it in and out of the market pretty quickly, this is not a bad way to go. What I've done here is I've set it up on a 10-second chart. Okay, so very, very short-term trading, and you can see that from this time, this is Eastern time, from basically 1:59 for the next 15 minutes or so here is all that's being shown on this chart. It's a 1-minute chart, or excuse me, a 10-second chart. So a lot of activity here. Very briefly, you have to kind of keep that in mind when you're seeing this. But again, when you know there's going to be major news like an FOMC report, the employment report on Friday mornings, if you're a more aggressive trader, this is not a bad way to go and ride the momentum. So again, you can see rejection of this bar, then we start to get some selling off of what turned out to be the low. You can start to see some extreme buying start to come in the market, and we start to have some follow through on the buying. You can see this initial wave of selling finally was taken out. We actually tested right back down to that a minute or two later, and you can see buying started to get a little selling, replaced by some buying, and so forth. And you can see there's just attempted selling that's rejected, some buying comes in, the market moves 8 points in a matter of a minute or two off of that. So again, this is not something I would recommend doing unless there's major news coming out like an employment report or a Fed report. So it's not something you do all the time, I don't believe. But if you're a more aggressive trader that likes to ride some momentum, it's really not a bad way to go. And you can catch some pretty big moves. Again, it's not necessarily something that I do, but I am for any strategy that fits your personality, your trading style. So if you're a more aggressive type of a trader, you may find that a strategy like this is a good way to get better information, better tools in your favor to help you take advantage of those situations that happen once or twice a week where you can ride that type of momentum. So hopefully that makes sense. Again, just kind of throwing it out there for people that are more creative or aggressive, that sort of thing. All right, we'll talk to you soon. Have a good one.